Gold price trims a part of intraday losses, still in the red below $2,800 amid stronger USD. Gold price retreats further from the record high amid a broad-based USD rally. Concerns over Trump's new trade tariffs offer support to the XAU/USD pair. Bets for further policy easing by the Fed also help limit losses for the commodity. Gold price, XAU/USD, trims a part of its heavy Asian session losses and currently trades around the $2,785 region, still down nearly 0.6% for the day. U.S. President Donald Trump's decision to impose tariffs on Canada, Mexico, and China lifts the U.S. dollar, USD, back closer to over a two-year high. This turns out to be a key factor that drags the commodity away from the all-time peak, around the $2,717 region touched on Friday. That said, bets that the Federal Reserve, Fed, will lower borrowing costs twice by the end of 2025, along with concerns about the potential economic fallout from Trump's policies and the risk-off mood, offer support to the safe haven gold price. This, in turn, warrants some caution for bearish traders ahead of this week's key U.S. macro releases scheduled at the beginning of a new month, starting with the ISM Manufacturing PMI later today. Gold price bulls turn cautious amid stronger USD. Trump's new trade tariffs help limit losses. The U.S. dollar, USD, spiked in reaction to U.S. President Donald Trump's move to impose a 25% tariff on Canadian and Mexican imports and a 10% tariff on goods from China, which in turn weighed heavily on the gold price. The U.S. Commerce Department reported on Friday that inflation closed out 2024 on a strong note and consumer spending surged in December, pushing back expectations for more aggressive easing by the Federal Reserve. The Personal Consumption Expenditures, PCE, price index edged higher to 2.6% on a yearly basis in December from 2.4%, while the core gauge climbed 2.8%, matching November's reading and consensus estimates. Moreover, investors remain worried that Trump's new tariffs, if sustained, could significantly worsen inflation in the U.S. and validate hawkish Fed expectations, further undermining the non-yielding yellow metal. U.S. Treasury Secretary Scott Bessent, who pushed for new universal tariffs on U.S. imports to start at 2.5% and rise gradually, said that tariffs are inflationary and would continue to strengthen the U.S. dollar. Trump's demand for lower interest rates, along with the prospects for further policy easing by the Fed, keeps the U.S. Treasury bond yields depressed and could help limit any meaningful downside for the commodity. Furthermore, worries that Trump's new tariffs could impact the global economy temper investors' appetite for riskier assets and warrant some caution before placing bearish bets around the safe haven XAU/USD. Traders now look to this week's important U.S. macro data scheduled for the beginning of a new month, starting with the release of the ISM Manufacturing PMI, to determine the near-term trajectory for the precious metal. Gold price technical setup suggests that the path of least resistance remains to the upside. From a technical perspective, the intraday slide finds some support near the $2,772 horizontal resistance breakpoint. The set area should now act as a key pivotal point, which if broken might prompt some technical selling and drag the gold price to the next relevant support near the $2,755 region. The corrective decline could extend further towards the $2,740 intermediate support en route to the $2,725 to $2,720 area. This is followed by the $2,700 round figure, which if broken decisively could pave the way for deeper losses. On the flip side, the $2,790 to $2,800 zone now seems to act as an immediate hurdle ahead of the record high, around the $2,817 region. Given that oscillators on the daily chart are holding comfortably in positive territory and are still away from being in the overbought zone, some follow-through buying will be seen as a fresh trigger for bullish traders.
Friends, thanks for watching. Please subscribe my channel for more videos.